Hello again traders, right, this is take two. Had a bit of a interruption on take one, so I've got a couple of levels marked on here, which is unusual for me. I normally start with a blank chart. So we're talking about line chart levels. We were talking about them on Twitter, and I was about to create a couple of charts to show what I meant, and it's very difficult to describe what I mean on charts, so I thought I would do a video, and or should I say on screenshots. On Twitter, it's better to make a video. So line charts are probably the equally most important thing of my trading. You know, I mentioned three things to Gaz. That's the 3CR, the RSI histo momentum, and now line charts. I forgot to mention, of course, 2B reversals. So what you're looking at here is H1, and these levels are drawn on H4. So if I flick to H4, you will see the horizontal level is equal to the close and the open of the candle, what I call the battleground, if you like. Buyers pushed up, sellers pushed down, buyers pushed up, sellers pushed down, and then it collapsed. But in the up move, the line chart level is significant because once it's broken, it is, you know, is very important to me, and I use these all the time, literally every trade on every time frame. So if I was looking at H1, considering, well, what's that doing over here, then I want to see what the H4 is doing. And at this point here, after this H4 close, I can clearly see that line chart level has been broken, but the wicks would still cause me consternation. But if I look at the line chart, we can clearly see the level is broken, price went up. So how do I use this, you know, on the lower time frames? Well, I use it to give me the sort of bias, if you like, the confidence that levels have been broken. You know, because if we're looking at this H1 chart, this is an absolute mess. Has it broken that? We've got a line level up here, as we know. If we switch to line charts, close and open again, just like on H4, and there's the line chart level. So once again, we could have used this as confirmation for a potential trade over here. You know, these moves on US 30 are absolutely massive moves on these, you know, probably 1,000 points or whatever, you know, 100 pips if you use it that way, whatever. They're massive, so, and fast as well, which is great. So that's how I use the line charts. You know, if I want to know whether, I don't know, let's have a look at an off-the-cuff one. Let's go on a lower time frame, try that. Excuse me. So here we are, flying by the seat of my pants. Here we've got a situation here. This is downtrend, high, low, lower, high, lower, low, pullback. There would be 3 CRs here, 3 CR there, 3 CR here. Descending trend line. We've probably got a little bit of divergence in there. All of these things are always taken into account. High time frame, 3 CRs. There'd be one over here, no doubt. So let's look at the line charts as well. You watch, this one won't do what I wanted it to do. So we'll move one of those levels down, and on the 15-minute chart, we want to know whether that level has been broken. We want to know whether that level initially was broken to consider potentially going short here. And there's your line charts, the close and open of the candle, close and open of the candle. So those levels are there. Now I'm praying that these levels look different on the 30-minute. Oh, I didn't put the vertical on there, did I? So let's put a new vertical. We'll put 2 on this so that I don't get confused with the previous one from H4. So go up to the 30-minute, and then we look at the line chart, and lo and behold, I can clearly see that's done what I wanted. I'll get rid of that now. So this one here, we can clearly see the line chart. We need to take this one into account, but with that, for this example, it doesn't, we should disregard it. So at that point there, on the higher time frame, what do I clearly know has happened? The 30-minute flip zone, supply and demand battleground, has clearly been broken at this point here. So what I want to see now on the candles is that the candle has broken that level, closed below it. So we can see that here. Ideally what I want to see is a tiny little candle just closing below this precise level here, the flip zone area. If you want to use the close and the open, remember you do get gaps, so always use the lowest level, as it were. If that was a couple of pips below that green line, I would consider that a potential trading opportunity. So then what I would do is go on to the lower time frames then and use them for my entry. So this here, had that been a smaller M30 candle, this here would have been a brilliant trade, because on the higher time frames this has been beaten. So it might take a little while to sink in, but for me it's clear as day. Okay, that level is taken for the 30-minute. These could easily be construed as, well, they are wicks. That's it. They're weak areas, weak selling and buying. They're testing areas, if you like. Let's have a look at that 30-minute again, just to double check that. And there you are. So they look strong levels on the lower time frame, M15, because they're close and open down here. But they are, in fact, just feeler gauges, feeler areas, if you like, test areas. And had that been the perfect close there, as I say, then that trade on the lower time frame would have been perfect. There are caveats and not innuendos, that's the wrong word. What is the right word? Oh God, it's gone clean out of my head. There are always different sort of inflections. That's not the right word either, but no doubt someone can correct me on YouTube comments. But so hopefully you can see what I mean now. So over here we've got a M30 level. So let's bring one of these up and let's see whether that. So what we're looking for is lower levels on the higher time frames, because the higher time frames take precedence. So let's move that over and we'll delete the other one. So on the H1 time frame in this instance, we would be looking for a lower level and a close above that level on the line chart. We'll put the line chart correctly on this so that we're not breaking any curve fitting anything. So let's move up to the H1 now and see how that looks. No, this one's exactly right. We've got an interesting set of lows here. Let's see whether on H1, so that one, we disregard that one, it didn't serve our purpose. So we've got 3 tests there on H1. Let's see whether M30 was a lot different. And M30 was. So we would have been worried about price being broken there. We would have been worried about this price being broken on the M30. But in fact, if we moved up to H1, we could have moved our level up. And now you know what I'm going to say. If we'd have broken that level, we'd disregard these, just pretend they're not there. They are significant at this point. We would need to break those because they are lows that have created all this higher, this huge trend here. Low, high, high, low, high, high. And that is big on H1. That's a big old trend, uptrend. So what we will probably see on the candles, and remember I'm flying by the seat of my pants here, we would probably see a nice close here, maybe a big close because of the volatility, but ideally just a tiny little close there, a pop back and a continuation. And there we have our, and this, remember, this is flying on the seat of my pants. That's done exactly what I'd hoped it would do. Close down, pull back, continuation. So hopefully now you're starting to get what I mean by candle line chart closes. By using the higher time frame always takes precedence over lower time frame. So let's have a look at those on the 30-minute again now and see what was going on there. Not a huge amount of difference, but you would be concerned potentially if we'd have been relying on the 3CR wicks. Oh, is that a 3CR? Yes, it is. What about this wick here with this wick there, that wick there? That's why the line charts clarify things for me. Once we've closed below, look, it's broken, pulled back and continued. So hopefully you're getting the point now. This wasn't meant to be so long, and it wasn't meant to be so sort of convoluted, as it were, with all the different levels. But, you know, we can clearly see this, the clarity you get from line charts. There's a line chart break there. There, pull back, continuation. You know, for me, they are priceless. If I'd looked at the candles on that, that is an absolute mess. But the line chart clarifies everything for me. And if we went up a higher time frame, we may even get a better looking level break, as it were. So let's have a look at the, remember we're over there now, looking at that level there, see what the candles tell us. Yeah, see that is quite scary. There's nothing, there's no real area that we could say, right, I need a break of this and I need a break of that, but why did this break and pull back and then continue down? In my opinion, it's clear that line chart break, and that's why I absolutely love line charts. Absolutely love them. So they are equally as important as the 2B reversal, 3 candle reversal for me, and the RSI momentum, and to an extent, you know, I love the TMA slope as well. So for me, I have the perfect set of indicators and all the other stuff on the chart as well. But line charts, that's the power of line charts in my opinion. So hopefully you've had a couple of light bulb moments. Let me know what you think. Thanks for watching, and sorry for that memory loss of that word. It will come to me the minute I close this video, I'm sure. Bye for now.